Hey traders, today is Tuesday. So the markets went green today in the face of Powell words. I could have a whole video. In fact, I did one, submitted it for review with Benzinga. They'll probably release it to the masses out there. This video here is about Apple, but more importantly, it's about how to handle this mess. It seems like a mess, right? It isn't. It's well choreographed if you just know where to look. For example, this is the Apple chart, 1 minute for today. Looks like it's on, somebody said. The SPX went full crackhead today. It kind of did, but we kind of played it okay, given the circumstances, and we were able to make money. So whatever transpires on the 1 minute happens on the daily, weekly, 2 hour, 30 minutes, 15 minutes. You just need to know the different time frames in order to make well-informed decisions. So before I forget, if you like the content, give it a like and subscribe to the channel. It's free. I release video not as often as I want to because I'm just super busy. I share my screen live to 350 people every day, over 9 hours a day, I promise you. What you're seeing here is shared live. We do a lot of good things trading fast, but every once in a while you need to pull back and look at the stock or tickers from a slower perspective. So this is Apple's look. All right. So this is a 1 minute chart, and it looks like Apple's going bonkers. The Apple disaster was averted around 135, 137. And let me walk you through that logic. So I'm going to back into what to do with it. So this is Apple on a higher time frame. This is about a year's data, worth of data. So for a while, when Apple fell below the 134, 135, I said Apple needs to immediately recover it and close the week above it. Thank God they did, because they would have had the scenario that brought Tesla, Nvidia, AMD, the whole market, Bitcoin to its knees. On a weekly basis, they lost a huge head and shoulder neckline, and they all went to the targets, and that was disasters. So Apple averted it. So it's still the king of stocks from that perspective. And here's the comment on this daily chart. If you bring me this chart not knowing what it is and say, I'm going to get long here, I would say, well, there are better entry points. This, the least I can say, this is not an obvious entry point. Don't be upset. We went long on the dips, almost all of these stocks. So we've been in a buy the dip mode, and now everybody is in a chase mode. I'm a little hesitant. So technically, this in here against this and that and this and the whole mountain and this whole mountain, this is not an obvious entry point. That doesn't mean it's bearish and you short it. You just wait for better signals. First of all, this is the first candle from a couple of days ago. I don't like to chase something into a prior fail that is this sharp. All right, so what do? I wait for a dip. How deep? At least cover this gap, whatever that is. So I can envision Apple falling back towards 148, 145, 144. The deeper, the better. And I will step up to the plate on some day when somebody says something wrong and the market go, oh my God, and they fall into panic from some stupid headline somewhere. Forget the headline. You know the story of Apple. You just get long on when everybody hates it. You get long to give yourself a better opportunity for success. Now, if I was looking to invest in Apple for the long term, I pile in all in right now. No, I don't. That's a joke. No, do not do that. The better way to do it is to nibble. If you say, first of all, I'll say, why the rush? Why now? Why not a week ago? Why not 3 weeks ago when it was down here? Why now? And you'll say, oh, it doesn't matter for the long term. Really? Okay, so if it doesn't matter for the long term, why rush? Why not wait out? So if you're early a day or late a day, if your argument for the long term stands, then it stands both ways. Why not wait a day or two for a better entry, for a better signal? But I may miss out. All right, so if you can't stand missing out, at least take partial positions so you can leave room to add at better prices, just in case. You think it's going to the moon right here and never coming back to this level? I seriously doubt it. So this is my take. This is not an obvious entry point. It doesn't mean you short it, it means you wait for better entry points. So first and second, this is a target 2 of a harmonic pattern. So this green thing you see here, target 1 was here, target 2 is about here. They could go to target 3, which is not noted, somewhere here eyeball, but I would rather miss out on a little bit to get better clues. So how do I handle something like this? I go down the lower time frames. So from here to here, they are buying dips. So I wait for a dip to buy. How deep the dip? I don't know. We'll see what happens. So this is a 1 hour chart. So now I have some levels to check on tomorrow and the day after. These tails, those are sellers. And the good thing for the bulls is you don't have failures unless you go back to October. So that makes it harder for the bears to look back and short against something that old. Okay, so it becomes easier to break out and not be able to stop. Maybe a lot of people are still bearish. They don't believe this. They hate the rally. Why hate it? Don't fight it. The more people hate it, the more puts they buy, the harder it is to fall, the easier it is to rally. So first order of business tomorrow, take out these prior fails. And if you lose this, you get down to here. The closer you get to 140, the better. Anywhere below 148 would make for a decent pick on an entry. Look at these buyers waiting down here. So technically, first of all, I didn't talk about fundamentals. There's no need. Apple is Apple. This is a solid base for this whole rally. How big is this rally? Let's check it out. 10%. So if they retrace into the base, I don't need a 10% retracement. I need a fall into support 1. Support 2 is around 148, 147. Support 3, anything closer to 143. And if they lose 140, whatever that is, then you just wait for a better dip. Now, the way I catch a falling knife, I don't need to be surgical. You can see my note. It says, catch a credit put spread on red days. So today I did that with Amazon. Immediate payout. Immediate payout. I did that with Pinterest. We'll see if I get paid out within the next 2 weeks. When people hate something that I like, I look at levels, and if they're falling into support, I'll throw a credit put spread. I don't need to be surgical. I get paid regardless. So Apple, not an obvious entry point on the daily chart. Doesn't mean you short it. Just means you be patient. There are other tickers while you wait for this one to get better clues. A breakout from here might have legs. I wouldn't buy calls going into here. I wouldn't buy shares going into here, especially if it's a short-term trade. And if it's a long-term trade, why not wait? You might be able to get it at a 5% discount, 10% discount. Okay, we'll see. All right, folks, that's it. This is Apple. Oh, if you subscribe to the channel, which you should, it's free, put the bell thing so it tells you when I release new videos.